Everyone to today's report, the 2nd of August 2024. Right, let's move on to the news for today. That is the Fed interest rate decision. Okay, so what does it mean? Okay, we just had that one. The Federal Reserve Chairman Powell provided a robust signal that the central bank is poised to reduce interest rates in September. Contingent of sustained inflation control amidst concerns of a potential exacerbation in labor market conditions. Now, he stated if that test is met, a reduction in our policy rate would be on the table as soon as the next meeting in September. Is this a surprise? The answer is no, because we expected it already, with the probability already hitting way above the 70% mark, right? We have talked about this in the past already. So subsequently, former New York Fed President William Dudley elaborated on Bloomberg, asserting the changes in the statement and the press conference today basically tell you that September is going to happen unless the economic outlook changes materially. So be it the current administration or the previous administration, they are saying the same thing, based from the language that Chairman Powell saying, probably we're going to see a rate cut coming in September. So these adjustments in the post-meeting pronouncement, coupled with Powell's remark, highlights a growing apprehension among policymakers about the risk of overly weakening the labor market, marking a pivot from their intense focus on curbing inflation over the past 2 years. They, apart from controlling interest rates, right, the Fed has another mandate, which is managing the workforce, and they now see the threat if they were to continue with the high policy rates, right? So it's not a good thing. That's going to hurt the labor market, because since April 2024, unemployment has incrementally increased by 0.1% monthly. In July, the unemployment rate escalated to over 4% for the first time since December 3rd, 2021. This trend might persist due to the lag effect potentially worsening if not addressed. Okay, this is something that we have seen, and due to this lag effect, even they go to do right now, they do expect that it could further increase. Now, the Fed is determined to lower inflation without sparking a recession. This would be a success if they're able to pull it. However, Powell has underscored the critical balance needed between premature rate reductions, which could reignite inflation, and overly delayed cuts. This we have addressed also in previous reports. By initiating rate reductions in September, potentially before inflation has stabilized at the 2% target, the Fed aims to provide a safeguard to prevent further deterioration in the labor market. Moreover, Powell indicated that a rate cut would likely not exceed 50 basis points. Okay, so this particular cut, don't expect it to be more than 50 basis points. Now, regarding whether this year would see additional rate cuts, right? Powell suggested the possibility of adjustments, stressing the Fed's desire for maximum flexibility and the adverse scenario of being constrained. So they don't want to say whether it's going to be one, but that is what it is projected to be. While looking at the CME probabilities, right? While still speculative, CME forecasts a subsequent rate cut in December with a probability of 72.8%. So it's still far. December is still far. There is this possibility things could happen, and it's based on the feedback from Powell so far. So let it be first, and that we will study the price action. So that this is now the possibility. So expect some price, the movements going to happen already, baking in all the expected movements that's going to come in the future, okay, with the rate cut. So that's the report for today.